I spend a couple hours every night after my wife and son go to bed analyzing stock charts. Loser. And a chart I always find myself coming back to when analyzing new studies is SQ, block, because this chart has a little bit of everything. A nice consistent bull move up, consolidation, a rip bull move, and then a rip bear move, followed by some more consolidation. So it's a good way to get a view of how a study is performing across multiple different market conditions at a glance. So when looking at this chart last night in the respect of my new dot arrows plot that I have created, I understood that I only really want to be using this reversal buy indicator on stocks that are ripping. Look at how well this dip buy indicator works when Square is in a sharp move up, right? Entrance bang, entrance bang, entrance bang, over and over and over again, versus, how it sort of performs here in the consolidation, or how it performs on the far right side of the chart over here in this consolidation. It made me realize I really only want to be utilizing this indicator on stocks that are ripping, of course. So I needed to come up with a way that within a scanner, I could objectify a rule set so that the scanner only returns stocks that are ripping like this. I came up with an idea last night. I'm going to share that with you on today's video. Just go ahead and hit the like button and I will jump into it. Now, when I'm talking about objectifying a rule set, I'm talking about the use of indicators. And indicators get a really bad rap for a lot of reasons that I actually would agree with. They're lagging. They're just reacting to what the price has already done. They're not actually predicting forward-looking moves. And I agree with a lot of that negative connotation around indicators. But you also need to use indicators in order to, once again, objectify a rule set. Because I don't want to just say, and I can't just say, if I want to plug this into a scanner, I have to have a way to convey my idea to the machine. That's essentially what you're doing when you're creating these studies, these strategies, these scanners. You are conveying human thought to a machine, and you have to have a way to do that, and that's what we use indicators for, correct? So the number one indicator that is used to decide price strength over a relative time period is simple moving average, and I like to use the 200 length simple moving average a lot. Just a nice long length. It's just one that I like to use. Of course, come in when I give you this code, when I give you this idea, feel free to change that to whatever length that fits your trade style the best. But I use this a lot in a lot of my trade systems. In a lot of my scanners. The close has to be above the 200 length simple moving average. The 9 SMA must be over the 50 SMA or whatever it may be. I use simple moving average a lot to objectify, once again, the ideas I have in my brain of, hey, I only want to be buying stocks in uptrend. Hey, I only want to be buying stocks that aren't, currently getting crushed. I don't want to be chasing the falling knife. I don't want to be entering any part down here, this, that, and the other. But I had the idea last night, what if we added a multiplier to this simple moving average? Because not only do I, for this instance, for once again, the idea I had last night, not only do I want it to just be above the 200 simple moving average, but I want it to be ripping. I want the stock to be very strong. I want the stock to be well above its 200 simple length moving average, like as in Square here. These dip buys are in the low 140s, and the 200 simple length moving average is at like 88 or 85, whatever it is around about here. So what if we take the 200 simple length moving average and we do close is greater than this 200 simple length moving average multiplied by 1.5 or multiplied by 2 or multiplied by 3, depending on, once again, how crazy you want to get and how, adjusted for your own trade strategy you want it to be. So let's go ahead and jump over to the scanner, show you how I built that, show you how I not only use that by itself, but how you can plug it into other scanners, why it's useful, this, that, and the other. So here is the code I have injected into a study filter within my scanner on ThinkorSwim. Close is greater than simple moving average with a length of 200 multiplied by 1.5. Vis-a-vis, the current price of the stock is not only just over the simple moving average length 200, but that value multiplied by 1.5. And once again, if you want to get even crazier, change this to 2, change this to 3, change this to 4, change it to whatever you want it to be, right? But that's the code I'm injecting. I've already run the scanner, and these are the stocks being returned, right? You've got, CLSK was one of them. Obviously, current 200 simple length moving average is at 650. This stock's at freaking 23. Insane strength, right? SOUN, current 200 simple length moving average, 246. This thing is just under 7. Insane. Mara was another one on the scanner, one that I can remember. Simple moving average length of 14, currently trading just under 30. Insanely well above your 200 simple length moving average, right? So you can just use it in this way if your goal is to just find really strong stocks, right? But also what I'm going to do, so I'm going to actually go in and copy this code, and then we're going to go into our dip buy. What did I call it? I dot dip or something like that. Yeah. So we're going to go into our dip buy scanner, and this is the scanner that is returning any stock that is currently giving the green arrow on the dot arrows that we talked about a little bit earlier. So right now, if I go over to VZ, you will see that, yes, on Verizon, you are getting a dip buy on the chart today. But guess what? Verizon is not 1.5 times above its simple moving average, 200 length simple moving average, should I say. So maybe I wouldn't really care about this stock. So what I'm going to do, I'm going to add a filter. It's going to be a study filter. I'm going to come in, and funnily enough, there might actually be no results for this right now because this is going to get a little bit specified. But you can see what I'm doing. I'm now looking for stocks that are giving my dip buy entrance scanner and are also extremely strong, or also ripping. We're looking for that SQ strength, as we talked about in the intro, to be buying the dip on. Let's see if any results end up coming up in this scanner. It'll be a little awkward if it doesn't, but even if it doesn't, I mean, listen, that's perfectly fine. There doesn't always need to be results in your scanner. It's actually better if you can limit your scanner down and down and down. And yes, right now there is no matching results, but let's go ahead and jump back into the SQ chart and just talk about where it would have returned true. Even though there's no perfect examples right now, let's go over a couple of good examples from the past. So as I mentioned, on this SQ, when it's ripping back here, that is the idea in my brain when I would like to be looking to buy dips, right? The 200 length simple moving average is around 85. The price of SQ on this dip is in the low 140s. It would be on the scanner. Look at how well it performed. This dip is in the 160s. The 200 simple moving average, that is a tongue twister to say fast, is trading at 100. This would be on the scanner. Look at how well it performed. It did dip a little bit more, but according to the dots, all of this territory here was buy territory. So you could have bought, and then it ripped. So still worked really, really nice. Let's zoom back out. Here, price at 214. 200 simple length moving average at 130 would have been on the scanner. Look at how well this one immediately bounced. Here, same kind of a scenario. Look at how well it immediately bounced. And then here, you would start to get away from the scanner. Now the 200 simple moving average is tightening up, meaning that the stock is no longer ripping as much. The stock is starting to consolidate. The 200 simple moving length average is closing that gap. It's no longer 1.5 times away. And look at how sort of you can see the strategy immediately not really performing as well. A couple of bounces after these arrows, fine enough, but also just, this buy didn't really work. This buy, of course, did work really nice, but you can see just a little bit more like chop now, not exactly as clean of follow-throughs as it was when we were 1.5 times our simple length moving average. So that's my free knowledge pass to you today, the multiplication of a simple moving average to dictate even more strength within your scanners. Hopefully you found it useful. If you enjoyed any of the indicators or scanners that you saw today, they are all available for download on my website, daytradingstrategies.net. There's a link in the top of the description below this video. Go check it out. With all that being said, that's going to do it for this video. But in the outro, I will link you all to a video of one of my custom scanners if you want some more information on how I build my full-fledged scanners out. Check out that video next.
Trading stocks. He talks about trading stocks. It's important for you Americans and other international individuals to learn about stocks.